Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilburn, and I'm joined today by Scott Bauer. Hey there, Scott.
Jeff, how you doing?
I'm doing great. Well, one of the toughest Decembers we've seen in equity markets since about the Great Depression. Does this turnaround in equities, is it coming anytime soon? And more importantly, will we see Santa Claus rally happening in the markets?
Well, I have to think that volatility is going to remain here at least through the end of the year. But, after the Fed speak and after the Fed announcement, we may get that Santa Claus rally.
Well, it's interesting. A lot of emotion being built into the market prior to tomorrow's announcement out of the Fed. The CME FedWatch tool has actually lowered its probability and the chances of a rate hike. What is your takeaway from that?
Yeah, last week or two, we've really seen that come down. It still makes sense to me that they will, raise rates this week. But let's see what the dovish or hawkish stance is moving forward into 2019.
All right, we'll be watching. Are you ready to get in this first lightning round, Scott?
Absolutely.
Where is Santa? Well, we just talked about where is our Santa rally. We certainly are looking at the E-mini S&P 500 down about 400 handles from its all-time high when it was back above 2,900. But right now, in this moment in time, how are you approaching the E-mini S&P 500?
Jeff, I'm looking to capture a potential reversal and an increase in the price for the E-mini S&P 500. A way to express this view completely risk-defined would be to buy an EOM 2600-2650 call spread in the E-mini S&P 500 expiring at the end of the month on December 31st. So I would be buying the 2600 call for about 29 ticks, selling the 2650 call for about 13 ticks. So that spread would cost an investor 16 ticks or about $800, which again defines my risk.
Well, this makes a lot of sense. And in the event we see a little bit of a kumbaya moment, if these trade tariffs cool down, any type of event to turn equities around, I think people are looking for a reason to allocate as we go into 2019, correct?
Absolutely. And this spread was priced with the ES trading around 25.72 and at the money volatility trading 21.97.
Oh, I like it, Scott. And please remember, these are trade examples, not trade recommendations. Let's move into the second lightning round, pal.
All right, let's do it.
Fed, and more Fed. Well, here we are, day one of the Fed meeting. We have a high expectations, and it is really interesting. We talked about the CME FedWatch tool lowering that probability. I think we still see rates being hiked tomorrow, but at the end of the day, that 2019, that initial 3 rate hikes, I don't think it's happening. What's your takeaway, Scott?
I agree with that. I mean, I think we're still, like you just said, going to get that rate hike, but we probably get some dovish talk going into 2019 and maybe see that probability of the number of rate hikes coming down even further.
Well, the trade example I want to utilize is going to line up directly with any type of dovish stance we see out of the Fed. So I'm selling a put spread in the E-mini NASDAQ. Certainly we've seen a lot of volatility in the E-mini NASDAQ, but by selling the EOM, the December expiring New Year's Eve, 12/31, selling that December 65.50 put, which is essentially at the money, I'm going to collect about 142 ticks. But I'm also going to be buying that same expiration EOM, but 200 handles lower, I'm buying the 63.50 put. That's going to cost me about 70 ticks. So at the end of the day, Scott, this put spread is going to allow a seller to collect about $1,440. And if we do see a little bit of sentiment change, you will see the NASDAQ react dramatically to that. But remember, this trade expires 12/31, and this was all priced out for this trade example when the market was trading around 65.45 with at the money vol right around 28.
No, Jeff, I like it a lot. And like you said, there's a lot of premium there because of the volatility. But most importantly, it is completely risk defined.
All right. Well, thank you as always for hopping on to Striking Options, Scott. And we also want to thank you for tuning in. Happy holidays to all, and we'll see you next year in 2019.